Hey everybody, this is Mike DeBliss. We are starting a fresh new tax series today called How the IRS Reconstructs Income in Tax Fraud Cases. It's a fascinating subject and one that I have a lot of information I'd like to share with you on. I actually came to this area of tax law with an interest in defending clients charged with criminal tax offenses. We began a series yesterday where I started to touch a little bit on tax crimes. What is very interesting about tax crimes, and they are a creature in and of themselves. The biggest tax crime that there is tax evasion, in the sense that it has the largest punishment. And there's so many things we're going to talk about here, and I don't know if I necessarily want to go off book and start moving too quick ahead versus just kind of letting it evolve. Well, one thing I would like to say. Uh, Again, tax offenses are a different breed. The way cases generally get referred to the Criminal Investigation Division of the IRS is through an examination. That's basically the front line. However, there are other ways, of course, that a case can get referred to CI. But typically, an examiner begins an examination. We like to call these examinations where there are fraudulent items an eggshell audit. They tend to be examinations where the CPA knows once it gets started that there are some potentially fraudulent items on the return, or perhaps that were left off the return, but that were unbeknownst to the CPA at the time he or she prepared those returns. So even if we go scale back a little bit more, most CPAs these days are absolutely aware of the fact that they could be dragged into a criminal prosecution by the U.S. Attorney for being an accomplice in the sense of aiding or abetting a taxpayer's deliberate underreporting of gross income. And so what they tend to do is draft these letters to their client, where they require the client to sign these letters. What's contained within them? Well, typically they will list item for item what items the taxpayer has provided them and which they relied upon in preparing the return. And then, of course, we have the jurat, which is when the taxpayer signs the return, they are signing not just their name to it, but also in signing, they are acknowledging that they have reviewed the contents of the return and that it is accurate. So notwithstanding the fact that a third party, namely the CPA or the enrolled agent, was the one that actually prepared the return, they, by signing the return, by every one of us signing our returns, we take ownership of everything that is contained therein. So, in the sense that the tax CPAs are very, very careful about ensuring that they dot all their I's and cross all their T's, for fear that if an examination was ever begun on one of their clients, and the agent came to learn that there was perhaps an undisclosed foreign bank account. If the CPA hasn't protected themselves and had the client sign such a letter acknowledging the items that they did provide them, then potentially the U.S. Attorney could bring an indictment against the CPA for aiding and abetting the failure to disclose the foreign bank account. So that's why they try to do their due diligence and protect themselves up front. But let's say, for example, that the information let's say, for example, on the other end of the spectrum, that the tax preparer aided and abetted the client. Well, then they've got a problem because, again, they are subject to criminal prosecution because there are a myriad of tax preparer criminal penalties. And so, that's why we hear of tax preparers that are charged and indicted with these tax offenses as well. But hearkening back to what I talked about before, typically an examination is begun. We call these examinations eggshell audits because at some point during the examination, the tax preparer understands that there is something that was left off of the return. The issue always becomes one of whether it was intentional or whether it was a mere oversight. If it was a mere oversight, then that's going to be a problem for the government because the government has to be able to prove willfulness for these criminal tax offenses. If it was a mere oversight, then we're looking at mere civil tax penalties, which are nothing to shake a stick at, but of course will not deprive the taxpayer of their most cherished possession, and that's their liberty. So there are so many things that could happen, but let's say, for example, that the examiner discovers that there were items that were unreported, and they suspect that they were fraud, that there was fraud involved. Well, they would refer the case to a fraudulent technical advisor. And the fraudulent technical advisor is essentially an intermediary between examination and the CI function. CI is short for criminal investigation. They are a division within the IRS that will work a case up for submittal to the Assistant U.S. Attorney for criminal prosecution. And so they've got special agents in their department. They have the power of the summons. They have summons power. You name it, they do it. Just because a case gets referred to CI doesn't mean that it will be indicted. They have to work the case, determine how strong the proofs are, how likely the case will be. They will be able to prove the case, because at the end of the day, the criminal investigation arm of the IRS, just like the tax section of the U.S. Attorney's Office, has limited resources. So they are going to pick and choose their cases very carefully. They don't want to invest an inordinate number of resources into a case that's a dead loser, because they need to maximize the deterrent effect through the publicity that comes from a conviction. And so they will target celebrities, they will target professionals, such as attorneys and such as CPAs. And so, this is why, there's so many moving parts and so much that goes into the formula or the calculus for whether they are actually going to refer the case to the U.S. Attorney's Office. So that gives you a broad overview. You can still advocate zealously and still save a case from being referred to the Assistant U.S. Attorney, even when it's in CI. And so there are meetings that take place between the attorney representing the client as well as the special agents in CI. And like I said, there are ways to circumvent the prosecution. So in all criminal cases, the government must prove each element of the offense beyond a reasonable doubt. When it comes to taxes, again, the Rolls Royce of all tax offenses is called tax evasion. The three main elements of tax evasion are substantial tax deficiency, and that, on the operative word there, is substantial. Why do I say that? Well, no doubt the IRS